Hi, everyone, and welcome to this week's edition of Mish's Market Minute, sponsored by StockCharts TV. And I'd like to cover something that I'm really thinking a lot about as we go into 2022. Yes, at some point, COVID will be alongside of the flu as something that people get, will be nasty, and there'll be a vaccine or a shot for it. And we will be able to hopefully move on with our life. One of the areas that I think could be greatly impacted positively in the stock market as a result of us coming back to life is the whole notion of medical care. To this point, hospitals, doctors, nurses, understaffed, but everybody has been really focused on COVID. And so people have not gotten their tests for diabetes, heart disease. They haven't gone for any non-elective, elective surgical procedures, and all those kinds of things that people just ordinarily go to the doctor for should come back, which got me thinking about the space of medical devices. Let's explore.
So I'm calling this segment Medical Care Beyond COVID. I did some research about just things and trends in the medical device business. And I found out that there are a lot of these medical device and medical supply companies are positioning for a boost in sales. And based on everything I told you in the introduction, that makes sense. Non-urgent surgery rate dropped obviously during COVID. And so we expect, and the medical profession expects that to come roaring back. Diagnostic testing beyond COVID, expect that to be roaring back. And what's interesting about the whole space is that the projection is that the global medical device market will reach $745 billion by 2030. That's a growth of 5% annually over from 2020 to 2030. And there are some real big reasons for that. One is obviously an aging population, not just in the United States, but worldwide. The prevalence of infectious diseases, obviously we just saw in the last couple of years, and chronic diseases as well. So just because we got through COVID doesn't mean we're still not going to have chronic diseases such as heart disease, for example. There's also going to be growth because of technological innovation. And a lot of that innovation is not only on online type of services, but better payment services and just better with insurance. So actually insurance companies are also adapting to a changing world as well. So what I thought we would do today is cover IHI, which is the ETF for medical devices. It's a niche sector fund specifically targeting domestic, so that would be in the US, companies that are engaged in the medical devices portion of the broader healthcare space. And here are the symbols that we're going to cover. So let's go to the charts. Now, I did not give this to you in your list of stocks to look at today, but I thought it's an interesting thing to keep up here because this is the Biotech ETF. And so a lot of the pharmaceutical companies are in this sector. And you can see that this has really had a hard time this year so far, and actually started with a declining movement in the fall of 2021. And so this is something that we could also potentially keep an eye on, but right now seems really out of favor. What we actually like to look for is a mean reversion trade, which we had one here, but it didn't go anywhere. Notice it broke down on the Bollinger Band, on real motion, and the same thing with price came through. But this is why you need certain confirmation. So in this case, it didn't really get through that 105 area that it needed to clear, or the low of this day. And so therefore now here we are making another new low, and now we're really weakening here in real motion. So clearly in my conversation, we're not talking about pharmaceuticals at this point, but instead we're talking about looking at IHI. So IHI, this is the iShares US Medical Device ETF. And a couple of interesting things about this particular chart. Number one is that last week, or actually the beginning of this week, when the market came in lower, this thing broke the 200-day moving average, which of course is sloping up, and then came back through with a couple of days of follow through until Thursday, when I'm speaking to you, when the whole market is trying to figure it out. Now, when I talk about range bound market, this is a classic example right here, because if we scroll back a little bit, what we can see is that this level of 61 has been tremendous support for quite some time. Actually, we have not been below the 61 level really since we were here in June or July of the summer. So at this point now, that's really your ultimate risk, is going to be 61 in this ETF. If we take a look at real motion, obviously it's weak, obviously not showing any great leadership against the SPY at this point, and did have a mean reversion trade, just like I showed you with XBI, only in this case, we broke down under the real motion Bollinger Band and came back through. We broke down on the price and closed back through, so that's clean. So now what we need again is some kind of level of confirmation that this thing is going to maybe test at least the top of the range and potentially go higher. So if you were interested in getting into this trade, a couple of ways you can go is, one is you can say that if it closes and maintains a close over this high of this day right here, which is 62.51, that's healthy. Not so much intraday activity, but closing prices. And then you have a really tight risk under 61. Number two is you can wait to see if we get some kind of phase change. Now we do have a negative slope in the 50, but two closes over the 64 would be a phase change. But one thing I want you, and you're going to hear me talk a lot about this year over and over and over again, is a range bound market means that you want to buy things sometimes when they look terrible or testing the bottom of a range and get out quickly if that range breaks to the downside. And you want to sell when things get close to the top of the range, even though they're starting to look fantastic, and not necessarily chase. So you have a range, in this case from 61 to about 66, $5 range. In the overall market, we'll look at it another time, you can see that in, let's say, the small caps, the range is about a 10% range. And the reason why we're seeing that this year is because there's a lot of confusion, and I know I'm digressing, but this is important, about whether or not Fed policy is going to really be so aggressive to control inflation, in which case putting the kibosh on the stock market and potentially some of the aspects of the economy that are already still floundering, or whether they're going to stay kind of the course, let inflation run hot, and thereby also allowing people to come back into the market with some confidence, because we did have a surge in money flow in 2021 to the tune of $1 trillion of new investors buying ETFs. So we don't know. And that's why I think we're going to see a range bound. So that's IHI. Let's go on to the next one. Everybody knows this company. This is Johnson & Johnson. And Johnson & Johnson, an interesting company because it has a twofold. One is, yes, it's in the medical device space. But two, it's also in somewhat of a consumer staple space because of the fact that Johnson & Johnson makes many products that we use every day. And in an inflationary environment, we're going to see a lot of use of things that are necessary as opposed to things that are not necessary. So if we look at the Johnson & Johnson chart, this is, by the way, had a golden cross here, price far away, but it is in a bullish phase. However, the momentum is not necessarily following in kind, and it's still underperforming the SPY. So again, we have a range. Now, in this case, the range is pretty low down from 155, let's say, to up to 175. So let's take a more current range. And interestingly enough, the current range would be like 165 to 166, where the 50-day moving average is, versus the top here at around 175. So this would be an interesting opportunity, potentially buy if it shows any weakness closer to the 50. Remember, getting out if it breaks, and not necessarily chasing it if it breaks this 175, unless we start to see the whole market explode or the whole medical device industry explode. BSX, Boston Scientific, on the other hand, look at what this one is doing. This is having an extraordinary day as I'm even talking to you. in that really since it touched down on its 50-day moving average, it's just gone up 4 days in a row. And guess what? We're getting to the top of a range. Now, again, this range is a little bit wider than some of the other stocks, and that's a good thing. You want to see things that are going to actually establish its own personality as opposed to just being stuck in this 5 to 10 or even 15% range. And that's certainly the case here. So I always caution again about earnings season that you should check the reports, but you can see here that the momentum is increasing. Obviously, this is well outperforming, but we're getting into some resistance up here. So I don't know if I'd necessarily be looking to buy here, but if we got any kind of correction back down to around 43.50, that could be an interesting place to go. But more importantly, it's showing what's possible in the medical supply space. Now, this is Edwards Lifesciences. This is a company I haven't traded in a really long time. So sometimes when I do these things with you, I'm looking at stocks that I haven't looked at in a while. So we're having discovery together. And in this particular stock, you can see that we had also a trading range. Every time it's gotten close down here around 105, it finds buying. And now we got past the trading range, but just so typical of what we're seeing is if you start chasing strength, it comes off in pretty much everything except for commodities. And even commodities, we try to caution people from chasing strength too much. Now, this held the 50. Right now, you can see here, we have a little bit more work to do. Certainly the momentum isn't killing it. But if if Edward Lifesciences, and again, check your earnings, gets to around 125, you have a pretty decent risk down to this low here at around 117 to see if we can get up to the high or maybe even possibly go higher. Next one here is actually a really good stock. Almost bought this stock today, and that is Stryker. So Stryker Medical Equipment, and I see Stryker trucks around town all the time. So it's a little bit also of a consumer instinct. But look how sloppy this chart is. I mean, sloppy charts are all over the place right now because the market is, again, choppy. When you're in the middle of a trading range, that's when chop happens. So in this case, though, we do have the 50 and the 200 very close. We tested it. We came back through. So that's the positive side. We've maintained the bullish environment here in phase, but we can see nothing really great yet in the momentum. I'd love to see this momentum get stronger, but I would keep my eye on this one because again, if the whole space improves and the market isn't going to completely fall apart, if it gets through 280, this could have some good potential upside. Or if we get another move back down, say closer to around 262, 263, at least you know right away if it breaks the moving averages that you're wrong, keeping with the buy when things don't look as good. Next one, TMO, which is Thermo Fisher Scientific. Now, obviously, this one doesn't look so great, right? However, same principle about these trading ranges, and I think you're going to see this more and more. Every time this got down, this is an expensive stock, about 597. Some buying has come in, except right now you can see not too much. Momentum is definitely declining. And so this would definitely not be a stock that I would necessarily be looking at to buy. And in fact, if we get any kind of major sell-off in the market from here, which is possible, of course, then this would actually be something under 601 you might consider going short with a move down to around 550. So that's another way to look at this going forward because it could be in a strong space, but still be a weaker stock within that space, which is why it behooves us to look at so many different things. Next one is Abbott. Abbott Labs. Now this says healthcare pharmaceuticals, but it is in the IHI space. And so if we take a look here, it's breaking down under the 50-day moving average, which it has not been under since October when it gapped up. Obviously, this must have been an earnings play, held at 50 and continued on up. So now we have to look down here. So obviously no leadership and momentum declining, and no divergence, pretty much in line with what's going on with price. So there's a couple of ways to look at this one if you are interested. Number one is let's see if it holds around this 130 level and gets back through the 50-day moving average. Because remember, we need 2 days to confirm a negative phase change. So right now we have a 1 day, but that's not a confirmation. So if it gets back over 132, you simply risk to underneath today's low, and you can go in that way. Number two is that you wait now to see if this thing moves lower. I wouldn't necessarily say I'd go short this one based on the gap, but if we get anywhere near this gap low here and the 200 at 122, that could be an interesting opportunity as well. The next one here is Medtronic medical equipment also. Now this I really like because look at this chart. Actually, I hadn't looked at this. This is my discovery with y'all. But you had, first of all, a mean reversion trade perfect down here. And guys, you should know me by now, a new 60+ day low reversal trade. So you had kind of a double mean reversion and you had follow through on this one. Came off with the market, and now with the market actually, well, kind of flat down mostly in NASDAQ, you're seeing that you're starting to clear the 50-day moving average. At the same time, you're showing more positive momentum here and even a little positive divergence and outperforming the SPY. So this one is probably my favorite of the bunch so far that I've shown you because it's so clear. I would check earnings, of course, but if we get a second close, you're going to hear this video the next day. So if we get a second close over this 50-day moving average, then you could probably take a shot with this and risk to under the low of this day, which would be a risk under 108.55. And then to see if you can get a move closer to the 200-day moving average. But certainly that shows some promise, if not for the whole space, for this particular company. Next one is BDX. So now BDX kind of also looks pretty great there, like Boston Scientific. This is Becton Dickinson, another medical supply company. So you can see why I'm starting to get excited about this space, because you're seeing stocks like this. Now, in this case, outperforming and big on divergence, maybe a little bit too big and a little too overbought. We could actually get a mean reversion to the downside on this. But if you get a move closer to 250, that could be a really good opportunity. And I wouldn't necessarily be afraid of this. I would just say if you're looking at this right now, just make sure you understand that you have resistance going back to September, where my line goes across here horizontally to the left, up right where it's trading right now at 263. So if you're more of a momentum trader and you do want to get into this above this 263 space, then you just have to find a good risk. And I would say probably the best risk would be somewhere between 257 and 257.50. Now I showed you Edwards Lifesciences. I don't know why this came back. So let's skip that and go to ISRG. Okay, now this one was one that we did well on. We caught this rally, got out, and it sold off, missed this one, and now it's come straight back down, really weak in momentum and weak in also its leadership, or lack of leadership, I should say, but also a range-bound instrument. Look at that. Let's even go back a little further. If you look at where my cursor is back here, going back from July, so we can give it a little bit more room, and we can say 308, 309 is the bottom of the trading range. So you could look to see if it gets down there, and you can also look to see if it gets down there or anywhere near there, it winds up breaking down under this Bollinger Band and coming back for a mean reversion. But it would also mean that it would have to do that in real motion as well. And right now you can see it's just now touching the Bollinger Band. But Intuitive Surgical should be a company that would do well if we see any kind of boom in medical devices. Now, if it doesn't quite sell off further from here, and let's say holds this 200 and gets back through 325, 326, then I think you have another opportunity to get in with, say, a risk to under the recent low. And I hope you guys are taking notes when I say all of this, because it's a lot of numbers and information. IDEXX Laboratories is another one that looks pretty god-awful at this point. So at this point, I would have no interest in this particular stock. However, if we go back a little bit in history here, you can see that in last year, it traded down to 507 and then had this explosive move higher. So that's interesting. So we have really good support down here at around 500 to 507. And with this type of move lower, again, we can look for a mean reversion trade or some other event that tells you maybe a new 60-day low reversal on good volume against this 500 that perhaps this particular stock is overdone. Next one here is DexCom, medical supplies. So you can see how mixed this industry is right now. So you can see that this tried to have a 60-day reversal, mean reversion trade. And again, unless it breaks out this low, it's still obviously in play, and this low would be 435.47. But at this point now, it's coming off and needs to get back over this 200-day moving average, and I would even say 500. So at this point, either watch to see if it doesn't break down under this 435.47. Let's say it gets down to 448 where the Bollinger Band is and turns around. That could give you a very cheap entry type of situation, or if it can get back through the 200-day moving average as well. And again, if we go back in time, look at this. All of 2021, this was trading basically under 430. And then it broke out over 430. And so that's another area to be thinking about. We just talked about how this stopped at 435 as major support. Couple more left here. Baxter is another medical supply company, also now completely the opposite, doing well. Had a little bit of a reversal top here, so we got somewhat of a correction. We're looking at about a 10% correction. We haven't really quite gotten there. But nonetheless, if it can hold up around 85 and get back through 87, that could be interesting. Or if it comes down lower, I'd be looking at this one again at around 82.50. Notice here this top and this range at 84. So you're starting to come into support. So this would be another interesting one to keep your eye on. And two more, we've got ResMed. So ResMed did tank and now came back, medical equipment. Also, mean reversion trade here that followed through. So only the XBI mean reversion trade so far hasn't really followed through. However, we got 1 day on the 200. We need a second day on the 200. And it looks like it could actually take some leadership from the SPY, which would be good. So you can either buy it on the hold of the 200 or wait now for it to clear back over, let's say 260, and then see where it goes from there. And finally, Zimmer Biomet Holdings. This is not as big in the IHI. It's only about 2% of the basket. Some of the ones I showed you earlier are much heavier weighted in the basket. But nonetheless, an interesting stock to be looking at, because after it broke down, never really got a mean reversion. Well, never really got a clean reversion trade, so we can forget about that, but did get a new 60+ day low and gap. And now we're starting a new sort of range here where it's finding support around 124 and it took out the 50-day moving average. So once again, a second opportunity where it holds and closes over 128. I might give it a little more because you can see we have some chart resistance here at 130, but you can take a look at it at 130, probably risk about $5 to see if this thing has got some legs to go higher.
Okay, so that's a wrap. I hope this gave you plenty of ideas to what to look for forward. Remember, the market will be choppy and the market will be range bound. However, at some point, there should be a surge in some of these medical companies as we get back to what is now the new normal. Thanks so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.